Hey everyone, welcome to today's Steady Trader video. Today I have a free resource for you. Before I show you this resource, let me just be clear. I'm not being paid by this website or this thing I'm about to show you. It is completely free, and I think it's imperative that one uses this resource. So it's not an endorsement at all, and they probably should be paying me for doing this video, but they're not. They didn't even know I'm doing this probably. So anyway, before I show you this, let me just make one thing clear. As you guys probably know, if you've been watching our videos here for some time, I'm all about looking at the market from a top-down perspective, understanding what's happening in a big picture, then on a sector and group level, and so on and so forth, until you finally arrive at a stock that you may or may not be able to buy, or maybe an option trade you can do. The tool I'm about to show you is exactly for that. Now, if we talk about U.S. stocks, which is predominantly stock-wise what we look at, although we do have very global audience and a global outlook on a whole bunch of different asset classes as well. The great thing about, say, like the S&P 500 is that it's very neatly divided up into like a pie. Literally, I'm going to show you this. And so you can see exactly which sectors and groups of the market are how much weight. And so let me just show you. Let me show you this thing here. All right, here it is. This is the website you need to go to. It's sectorspdr.com/sectorspdr. I'll keep it here for just a minute or just a few seconds. Sector, and you can pause the video, I guess, if you didn't catch it. sectorspdr.com/sectorspdr. If you do that, you'll get to this page. All right, and you can see this beautiful pie chart. What this is the S&P 500, the SPY ETF, which is essentially an S&P 500 tracker, divided up in its different sectors. And there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 sectors in the S&P 500. And if you hover over these individual bits here, you'll see on the right-hand side something changes. So let's go back to the XLK here, this purple field, and you can see now over here, you can now see what part of them, or how large a part of the full pie that technology stocks make up of in the S&P. Right now we're at 28% and nearing a 30%, which is historically very high, and that's a discussion for another day. But this is important. So when technology stocks rally, for example, or they don't rally, that's like almost a third of the market not participating. But if they do rally, right, you want to respect that. So for example, in the past few days, technology stocks rallied, and that of course pulled the whole market with it. Now, what happened yesterday? Yesterday was June the 6th. Yesterday we had the second largest part of the market. The financials started to actually wake up. So let me show you that. So now if you look at the XLF ETF, if you can see it, that's right here, right? You can see that's 14% of the S&P 500. Right? So if the financial stocks are starting to wake up, then that's probably a pretty important part of the market, a pretty good sign for the market to kind of continue to move higher, or at least sector rotation, right? So maybe some people are now taking money out of something that's rallied very strongly recently, like consumer discretionary stocks, which are, I think, the third largest part of the S&P 500, or maybe the fourth largest. Yeah, fourth largest part of the S&P. Maybe they can start moving some money into financials, right? This is the sector and group rotation that we always talk about. That's so important. So anyway, just want to give you a bit of a resource. Again, the link is here. Let me show you that one more time. It's sectorspdr.com/sectorspdr. And again, to be very clear, I am not getting paid for this. This is not an endorsement of any sort, although like I said before, they probably should be endorsing me, the spiders. But they're not, and so this is just a free resource. I highly encourage you to start using this so you know exactly what that means. And by the way, let me show you one more thing. So, what's not a big part of the S&P? Well, for example, energy is only 6%. Now, these are not unimportant stocks, and there's great sector and group rotation, but just because energy stocks are trading bullish doesn't mean the whole market sector is going to lift. But if technology stocks are rallying, which is almost 30%, and now financials, that's pretty good support, right? Not immediate term, doesn't mean stocks have to go crazy over the next day or two anymore. They've rallied quite a bit right now, but it's positive, right? So anyway, folks, I hope this helps. I'll see you guys tomorrow.